Yeah, no trade right now. Four looking good. Now we're going for bearish. 30 minute. Probably would wait on a 30-minute close. Because I would have gotten right here if I could. But if we could come back up and retest it, I for sure would get in. But now we'd have to, we missed the move, so now we gotta wait for a little bit of market structure. Yeah, no. No trade. Yeah, no. Not worth it. Be right back. Let's see what is today. It's the first thing that we should do. Make sure. Hey, bro, what's good? Kindly do streams every day. Explain why you're taking the trade. Okay, yeah, I can explain why I'm taking the trade. Give me 1 second. Let me make sure that everything is working properly. I can explain. Do you want me to explain yesterday's trade as well? Because I did have a 400 pip trade right here. If you want to see that, check this out. This one is really nice. 400 pips right over here. Super nice. Caught it from right here all the way up here. Got in with dynamic risk right here. Here, give me 1 second so I can load the. Yeah, so if you want me to explain the trade, just ask me any questions and I got you. So right now there is no trade. We missed the move. It happened. We weren't there to catch it. But what we can do is look at the most recent news event. So we can go ahead and check Forex calendar to see if anything popped up for today, which is what, the 30th. Oh dang, it's bank holiday everywhere, other than obviously the United States right now. Yeah, no crazy news events. Let's go see what's been happening with the Strait of Hormuz and like anything related to inflation, um, anything like that. So the most recent one at 12:39 was. You can hardly hear me. Here, give me 1 second. 1 second. Let me. I got some headphones. Make sure. Properties. Okay. Let's see. Do you hear me better? No, this is not. It's not the one. There you go. Okay. You should be able to hear me now. If not, okay. Can you hear me? Is it good or is it too loud? Yep. Let me check it on my phone. Is it too loud? Let me check it on my phone. Okay, that's actually perfect. I'm checking it on my phone. Okay, so we're gonna go ahead and check the news event for the last couple hours. Let's see if anything happened. So right now, the Strait of Hormuz is the U.S. put a blockade on it, where a lot of Iran ships can't pass through. So what that means is Iran is losing $500+ million a day. And so the US will not drop that blockade unless Iran comes to a peace deal. But Iran doesn't want to negotiate. They're putting mines in the water. They're just escalating the war. So if Iran doesn't want to negotiate and Trump holds up this blockade that makes Iran escalate into more severe war, things like attacking U.S. ships or escalating it to a larger scale war, it can lead into a lot of volume in the market because gold is such a uncertainty driven market and inflation hedge market, things like that. So what we kind of want to figure out is, has there been any updates in the Strait of Hormuz right now? So if we look right here, it says Middle East war may cause a sharp growth slowdown. That's irrelevant. That's just like an update. That's not really what's happening right now. Basically, it's just someone saying like, oh, this is da 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 da. Out of the 8 billion barrels, JP Morgan, China, Americans are cutting spending and prioritizing essentials over travel lifestyle. Yeah, a lot of the news events, Iran conflict right here, has cost U.S. taxpayers $25 billion. I can give you the link to the trading floor, but I have to change a lot of things in it because this right here is a private bot that I made myself. So give me 1 second. Let me make sure that nothing on this Discord is got a lot of fundamentals that you can learn in the Discord. Got a lot of PDF books that you can search up. Got a lot of YouTubers. Trading log, daily log here. Let me go ahead. Okay. Sure. Let's see. Let's invite to server. Make sure it never expires. Oh, look at that. Huge drop. But still, like this drop doesn't phase me. I wouldn't really care much for it. Here, let me go ahead and send this to the chat. I mean, if you want, bro, we can also hop on a call and I can explain things even more to you and just share my screen. Here, let me go ahead and send that to the chat. Oh, it didn't copy. Generate. Right over there, brother. If you have any questions, we could hop on a Discord call, man. Could really, really help you out. Yeah, so the reason why I didn't take another trade right here is because, honestly, I'm not really in a rush. I want to wait for the perfect setup, the same setup that I always use. I would have entered right here. Price create resistance. Super simple strategy. Price create resistance. Price came up and grabbed liquidity to fill more orders and then ultimately head down to the downside. It's the same setup that I take every day. Right over here, 400 pip trade, by the way, not to brag. Right over here. Had 2 trades right there and for buys. Let's see my last one. Where is it? Down. My God, that's all. Can't find it. Anyways, yeah. Same setup I trade every day. Don't really want to veer. So what we would wait for, if we are in a true downtrend right now, at some point, price is going to make a resistance. We're going to retest the resistance, and then we could continue down. It was super risky to take this trade because, there was no top wick on the 30-minute candle. I would hop on your stream every day. Kindly do streams. Bro, I will gladly do streams. I will gladly do streams. You're welcome to come anytime. I'll remember your name. I'll just call you K because it's K dot. Oh, I'll call you K dot. That sounds super cool. So, yeah, I'll stream every day. That's no problem. But today is a Friday, so I won't be streaming all the way up until Sunday. You should check out my my Instagram too. There's a lot of insight of like fundamentals to Forex, things like that, of why I took my trades. Like, let's look at this. Let's look at this trade that I took yesterday. This one was huge. This one was super huge. Oh man, I can't log into it right now. So yesterday, what happened, and I'll explain what happened yesterday to you. So the reason why there was a lot of bullish momentum in the market yesterday was because, there's still a lot of tensions with possibilities of escalation of the war with Iran and US, and with gold being an uncertainty-driven market. And as Trump continues the blockade, making Iran lose hundreds of millions of dollars per day, this makes people question whether if they will escalate the war even further. Furthermore, rising oil prices during this process are raising inflation concerns. So right now, oil is breaking four-year highs. You know what I mean? Like, we haven't hit this in years. It's such a huge, like, that's why all the gas prices in America are going crazy. Furthermore, rising oil prices during this process are raising inflation concerns. So lots of volume in the market today with the rising tensions and war escalations uncertainty. That was yesterday's trade. That was the 400 pip trade that we took yesterday. So super huge, super essential. A lot of knowledge in this stream. 7 years of experience, but I'm barely starting the stream, so not many people know of me or heard of me, but yeah, I will be consistent for sure. I really want to help people out and help them see the market the way I do. So right now, no trade. You don't want to take a trade in this. The reason why you don't want to take a trade in this is because if you impulsively take a sell right now, say you just take a sell, price hasn't made any retracements at all. We've already missed the big move. So say you take a trade right here and you put your stop loss to like 50 pips. Look how this looks on the 1 hour. That's a small little range. Price can retrace all the way up to here, or maybe even here, or maybe even here. You know what I mean? So it's like you don't want to trade just yet. You kind of want to wait for some structure right now. I would have, if I logged on before before 1 o'clock or 12 something, I would have took a trade right here. This was a perfect setup. And let's see how many pips, because I would have probably gotten from right here. That's 200 pip move, and my stops would have been probably right here, because then if you close above here, that would have been such an invalid trade, and you want your stop loss to give room to your trade, so you don't want to get too emotional, because a stop loss is such an emotional thing. It will literally make or break your trade decision, because if it's too tight, you're gonna think too what's that called, like you're gonna hyperthink of what you want to do, and you kind of want to give your trade some what's that called, some space. Here, let me add some music in the chat. Add some background music. Make sure it's not too loud. Yeah, so here's the Discord. There's a lot of knowledge in this Discord, a lot of news events. What I can do also is I can refresh all the news events from today. So do I just trade London session? No, I can trade any session, honestly. So sometimes I'll trade New York if I'm up, but I'm in the west side of the United States, so London session does work better for me. But say we're in some bullshit like what we're in right now, where price is just climbing down, there's really no structure being made. I would trade the New York session. You know what I mean? But yeah. So usually I do trade the London session. I don't know if there's any big traders in the London session that still stream. I know Dr. Dollar was streaming in the London session for a very long time, but he might have took a break from it. How do you use the news feed to understand fundamentals? And what about the bot? Okay, so to understand the fundamentals, you want to know what drives gold. So what drives gold, and I have it right here in fundamentals. Have it right here. So this teaches, this part of the Discord teaches you everything you need to know. So here it should say what's included Um, so, mm, oh, I don't have it on here. Oh, I have to add it in there. I think it's in my. Let me make sure it's not in my phone notes. So, what kind of drives the gold market is things like economy inflation, oil inflation, um, war escalation. Uh, what else? It should monetary policy. That's when um, those are like interest rates. Like when the Federal Reserve um, becomes hawkish or dovish, depending on how inflation is doing in the economy. So, so say like this: if inflation is too high, prices are skyrocketing. They will go into a very hawkish policy, which ultimately drives gold down because what they'll do in a hawkish policy is they'll increase increase the interest rates to things. So it makes spending slower and brings more money into the economy. So people will pull their money out of gold to go into something more yield friendly. Like they can increase their yields by running to something like the U.S. dollar that will start to appreciate over time when the Federal Reserve is in a hawkish policy. If you're dovish, then obviously people will run to gold. The price in U.S. dollar starts to tank. Things like that. You know, they want to go to a they want to go to a asset that holds its value and appreciates, which would be gold. It's much more stable during times of that. So, how do I use the news feed? So to answer your question, how do I use the news feed to understand fundamentals? So that's the first part of your question. I'll answer the second part. So I use the news feed by looking for key things: inflation. How is the U.S. economy doing? How is oil prices doing? That's another big driver to the gold market. What's the based on inflation? What do I think the Federal Reserve would make the monetary policy, whether they go hawkish or dovish? Uncertainty, wars, things like that drive investors to gold. So right now, the U.S. is in a war with Iran. And right now, that's a huge thing that's ongoing every day. You know, we have the United States attacking Iran's ships, and we have the United States putting a blockade against Iran. And so these things are huge catalysts to gold, and it can put so. Why do you think 4 years ago, these candles, look at this 30-minute candle. Let's see how big this 30-minute candle. 30-minute candle, almost 200 pips. You know, 4 years ago when I was trading gold, 30-minute candle would probably be like 40 pips, and it will look exactly like this. But you know, there's so much volume in the market nowadays because of what's happening with the war. So you really, really, really want to really want to focus on what's happening with that war. You want to know what the updates are. You need to know is there going to be more escalation, things like that, because those ultimately drive the market, whether it's up or down. And to answer your second question, what about the bot? So this is my beautiful live news bot. What it does basically, it pulls a lot of live news, or it pulls past data news, like basically what happened today within the last few hours. I can make it go longer past 24 hours if I want, but it just grabs the last couple of hours. So on my bot, which is also really great, it will take all the high. So the reason why I have a news bot is because if you look at Forex Factory, look at the limited news that you get on this calendar. You just get all the rates. You know, these aren't the only things that drive the market. There's macro fundamentals and geopolitical. Geopolitical is big catalysts like news, things like that. Macro news is more of it's more of like data, like inflation data, unemployment rates, monetary policy, CPI, PPI, NFP, FOMC. Those are huge catalysts, but it's so limited of data that you can possibly get for an everyday type of trading thing. Yes, it will give you data and it will give you like a better outlook of what's happening, like whether you're bullish or bearish, but like geopolitical is how you get these big news right here. Look how big this is. You know what I mean? Something probably happened right here. Will I go look at the data? Maybe, maybe not. We'll see. Like this right here, this move from this move is not a coincidence. Wait, hold on, no, that's actually too small. So this move to this move is not a coincidence. But look at what type of data you get. You don't get jack shit. Let's go to events. What you get one piece of data. Retail sales. I'm telling you right now, retail sales did not fucking drive this market all the way down, all the way to here. No, it did not. Like, yes, it might have gave it the initial push, but when we're talking about these huge fucking moves right here, it's definitely news that is going on. Definitely things like geopolitical news that aren't available on Forex Factory. So what I did is I created a bot that focuses on geopolitical, and what will it do? It will send it to our Discord right over here, and then what it will also do is give us an outlook of what's happening today. So the increase in UK national terror threat level alongside rising tensions in Ukraine and Iran heightens geopolitical risk, driving investors towards safer assets like gold. The ongoing conflict in the Middle East and military support to Israel could exacerbate instability, further fueling gold demand. Additionally, the surging yen concerns over U.S. spending changes may indicate a flight to safety, enhancing gold's appeal. Meanwhile, reduced consumer spending in the U.S. suggests economic uncertainty, prompting investors to seek refuge in gold. Overall, these factors contribute to a bullish outlook for gold as a hedge. So I don't specifically look at this, at the bias, and say, oh, it's bullish, I'm gonna enter a buy. No, I use it to gauge what type of volume is gonna be in the market today. If you know the news events that we got today were just, you know, updates, they're just people talking about certain things. Someone makes a statement, making a statement and people updating you about what's going on in the war isn't what's going to drive the market. But if you look at all these things, you can tell how much, if you combine all these things, you can tell if it's going to be a high volume day or not. Because, you know, when they're talking about nonsense, you'll have a really low volume day. You'll have a day where you're just ranging. You're ranging for hours and hours and hours with no breakout. But when something happens geopolitically, say breaking news is the best thing ever. It's like, boom, the United States just blew a missile through the Iran ship's cabin. Boom, that's huge. That brings instant volume in the market. It brings a lot of long-term market, like hours worth of market volume, because then after something breaking happens like that, people will start to and people want an update of what's happening, like whether that will escalate to further geopolitical risks, like war escalation. You know what I mean? So there will be volume in the market for hours after that, because there's a lot of uncertainty. You know what I mean? So I hope that it explains it a little bit more. If you need more in-depth questions, just come by every single day and you'll see what I'm talking about. So to kind of put your question into an example, this is how I would read the news for today. I would look at it, I would say yen surges to 155, that's noise. British Home Office raised UK's national terror threat level to severe due to rising Islamists to extreme right-wing terrorists. That looks like someone's opinion on what they think is like. What I mean by opinion is they're basically someone just made a comment. If you go up, USD JPY drops steeply. We're not looking at that. Oil rises as concerns over Middle East conflict persist. So that is a good update of what's going on, but it's not a huge catalyst. It just tells me that, you know, people are just scared of inflation and oil. Gas prices are really high right now, things like that. Port infrastructure in Ukraine's damaged Russian attack with 2 injured officials say. See, another statement. It's not really nothing that's going to drive the market. See, just a lot of like bullshit. There's nothing really. A lot of statements, nothing really happening. Oh, see, things like this. Roughly 6,500 tons of weapons and equipment were delivered within a 24-hour window via ships and aircraft as part of a major U.S. resupply operation in Israel. So that would be like something that you'd want to look out for. More updates on that. You got a part of it? Okay, that's good. Yeah, just keep showing up every day, and I'll explain how I use all these things to my advantage with my strategy. So yeah. Right now, no trade. Absolutely no trade. It's just driving right now. There's no retracement. Don't want to hop into anything stupid. So right now, we are just waiting. Nothing special happening. Let me go into my notes and see if there's anything more I can. Okay, So let me add this to, let's add this to our Discord. Shock events, okay. Yeah, bro, I will show up every single day and learn a lot from you along the way. Just don't stop, bro. Not planning on stopping. 7 years in. I'll be here, man. I used to stream a lot. Like, I have everything as unlisted, but I have hundreds of live streams in my I have hundreds of live streams inside of my YouTube. Hours and hours and hours worth of knowledge in my YouTube that I have unlisted, but I did a fresh restart. So so that people can actually learn better with how I trade now versus how I used to trade. How I used to trade was honestly like bullshit indicators and things like that. You know, it was my testing phase. So that was like 4 years ago. So I deleted all those videos and now I'm restarting. So I want to restart the correct way for people. The 4 hour is going to close in about 30 minutes. So this is where we could look for a real sell opportunity. We'll see what happens when the 4 hour closes. So that's what we're waiting on right now. We're waiting on a 4 hour closure and see what the next 4 hour candle does. Hopefully this is what I'm hoping, is that we create a resistance like this one over here to continue down. If not, the next 4 hours is gonna have to wait more 15-minute candles for us to get more data. But right now we're waiting 35 minutes for this 4 hour candle to close to see what the next 4 hour candle does. Because we just broke out this huge range, this range right over here. Let's see where we can possibly go with the next candle. You know, possibly drive down right here. That is a possibility. Or right over here, which is about, it's about an 80 pip range. You know, so what you would want is you would want like a sort of resistance, say like this is rhetorical. If it builds a resistance right over here, you have all this range to play with. So let's see. These are the two levels we could target today. You should also follow my Instagram. Link is in the bio. My Instagram shows the trades that I take and also reasons why I took the trade and what my setup was. So it's really important that you follow that. Shows you my risk management, things like that. Trying to grow it, but comes with consistency. Yep. So now all we're waiting on today, or for right now, is the 4 hour candle close. Let me go grab a water real quick. Do you trade live capital? Yes. Live capital. Prop firms are a scam. No point in it. Yeah, at all. No point in prop firms, in my opinion. Super big scam. Super, super, super big scam. High failing rate. You just do not want to touch prop firms. Just demo trade up until you're ready to trade live capital. Because prop firms are a scam. I would never touch those again. They literally bank on the failing rates of traders. Come on now. They put rules. Like let's look at the updated rules to a popular prop firm, Top Step. Such a big scam. The fuck? Where's all there? Is it Top Step or Top One? Where is it, the green one? I think it's Top One. So there's consistency rules. Like, what the fuck? A consistency rule? Like, the prop firm average consistency rule is 20%. So your total cannot equal to your highest win of the account. So if your highest win was 1,000, you need to make 5,000 on the account just to pull it out. You should be able to pull out. You made it to the fucking funded stage. You should be able to pull out your $1,000 whenever you want. What they're basically trying to do is they're trying to manipulate you in a way to continue to trade and higher your chances of blowing your account. That's so fucked up. There's Ola Prime and Funding Pips too. They're good with no consistency rule. You can try them out. I would just completely stay away. Realistically, the amount of time. So if I can restart my trading journey, you know what I would do? Instead of buying all the funded accounts that I did buy 4 years ago, 3 years ago, 2 years ago, all these funded accounts that I've bought in the past, you know what I would do? I would literally demo trade while saving capital. And I would set an amount of capital to save before I trade. And I would set it at a number like 5,000 or 2,500 or 10,000 or 20,000. Because if I'm 7 years into trading right now, right? You know how much money I could have saved instead of buying all these prop firm challenges, passing the prop firm challenges, then failing it later, and then rebuying, and then revenge buying. I've wasted thousands of dollars for, like, what, a few payouts? It's ridiculous. Like, you have to be really, really, really sharp to trade 10% of your capital a day. 10% of your capital a day. Because, look, $100,000 account, right? They say it's $100,000, and they're banking on you risking 1 to 2% a day. But what is your max drawdown? What is your max Your max is 3,000. So this is only a $3,000 account no matter what you say. No matter if you say it's $100,000 in your dashboard, it's still a $3,000 account. So the average, like say FTMO, let's look at FTMO. So the $100,000 account, let's look at that. You get a 10% max loss. That's a $10,000 account. That's really, really, really good. So say like, let's say like this, like you can risk 1 to 2% of that $10,000 that they give you and have a fair chance in life. But because you think it's a $100,000 account, you're going to continue risking 1% of $100,000, which is 10% of $10,000. That's 10 trades you could blow the account. And the average trader nowadays, because the average trader is a losing trader, because in trading you have to be like top 10%, and it's really hard to be top 10% nowadays. So to not blow your account in 10 trades when you could easily revenge trade and get very emotional with only 10 trades versus 100 trades that you can take if you risk 1 to 2% of 10,000 instead of 100,000. You know what I mean? So it's a big psychology thing that they're banking on, and it's really unfair to the trader. I would just stay away. I would demo trade and save up capital. You can pull your money out same day. So prop firms are stupid. Sorry. So, just waiting on the 4 hour. Let's see what the 4 hour has in store for us today. So what drives gold? Inflation, interest rates, the dollar strength, geopolitical risks, financial crises and market panic, central bank buying, yields, real yields. This is what pros really watch. So when you're talking about real yields, it's the interest rate to inflation rate. Because investors, say like big banks, the market makers like JP Morgan, people like that, they will invest in assets that give higher yields. So that's what like the top traders look for. You want to know where the investors are putting their money in to gain a higher yield, based off of what's happening, so like if inflation is high and US dollar, the USD Federal Reserve goes into a hawkish policy, they will run to US dollar for higher yields because the price is just going to continue up. Recessions are big. ETF flows and institutional positioning, and unexpected shock events. Those are huge. So we have a little over 15 more minutes. For the 4 hour. So you want to wait right here. And that's what we're doing. Don't want to get too emotional. What's your analysis on taking a trade on gold right now? I would not take a trade. I wouldn't. Why would you? Look, let me show you why. This is why you do not want to take a trade right now on gold. I will show you why. Where's your structure? You missed the breakout. Where is your structure? There is nothing right here telling you where the market is going. Because say you take a trade right now and it retraces 200 pips. It retraces this whole move. You know what I mean? There's no direction because so this is why it could retrace. Look at the 4 hour. Look how strong it is. Who's to say we don't reject right here where these candles are and continue up? Right? So what you would want to see is a 4 hour closure. You want to make sure that this 4 hour is very strong. And then you would want a wick up, right? Because price has to wick up. And that to grab liquidity and fill orders. So another big thing in trading is understanding order flow. The bid and ask prices and what are the prices. Because candlesticks are just a visual. You want to know what the price is that most people are pulling their money into, where they're getting in at, what big banks are putting their money in at. You know what I mean? So taking a trade right now is a very stupid idea. I wouldn't do it yet. There's not enough data. There's not enough data right now. Price can honestly retrace. Price can retrace right now, or it can literally just dump. So say you take a buy waiting on the retrace, but the 4 hour still hasn't closed. And then the 4 hour just decides that it just wants to keep continuing and create a huge ass fucking candle. You know, it's like right now you want data. You want to make sure that price is creating a resistance. Like, look at this one. Look at this one right here. Price jumped down. It created an area where a lot of money is sitting at. So say the area is right here, right? Price comes down, it wicks up to grab liquidity to start continuing down. That is the setup I take every day. I do not take trades when you've already missed the move. You've already missed it. Why would you take one right now? We might not even get a trade today. Who knows? I got in late at the market. I got in at around, I think, like this candle or this candle. I missed the move. I'm okay with that. Why, when I got into the market, I didn't instantly take a sell? Because you know why? Price could have came up to grab liquidity and come all the way back down. That would have made my stop a 120 pip stop. You want a good risk to reward ratio, and the reward ratio is not good right now because of the fact that we need a nice resistance form to continue down. What you would want is it to wake up, then down. If I take a sell right now, it could wake up and wick up over 100 pips because of how liquid the market has been lately. You know what I mean? If I take a buy, if I take a buy, you know, the 4 hour might not even create a top wick and just continue straight down. You never know what's happening. So you want to be very sure of your trade, and I am just not confident in taking a buy or sell right now. So that is why we are waiting. You do not want to take a trade right now. That is my analysis. It'd be a very poor decision to do that. Very, very poor. But right now we are in a very good spot. Very good spot. So to catch the really big move, you want to just wait. You want to wait. You want to see what's happening. You know, we can honestly start even consolidating on the next candle. We might have missed the entire move for London session, and there might not be a trade all the way up until New York session. Am I going to wait for that? No, I'm going to close my computer because I have something to do tomorrow. I I cannot just sit here trade all damn day. But if we're lucky, with all the London volume in the market right now, and it's coming up to New York session soon, there could be some volume to continue down, and we're going to see if there is. Hold on, a news event came in. Israeli army, we destroyed command headquarters and military buildings of Hezbollah in southern Lebanon. Concerns about. I don't think this happened right now. I think this might have happened during the day, and this is just an update. This is not something that's going to drive the market right now. But it adds more volume into the market because of all the uncertainty and geopolitical risks. Yeah, so there's a really high chance that we just consolidate for the next 4 hour. The 4 hours just might look like something like this right over here. Might just start printing up. Who knows? We got to see where we're going to retrace to. Cannot just take a trade right here. This would be a very poor idea. I would not do it. I do not recommend it. We have got to see what's happening. Ooh, look at the US dollar just tanking. What was this? GDP down 30%. And if you look over here, I have something that explains GDP for you guys. What's included in GDP? Measures the total value of all final goods and services produced within a country. Consumer spending. So it's pretty much like tells you about inflation. Yeah, but weak GDP, which was 30%. It's not. It doesn't match the forecast. Is that the news event for that? Let's see. Yeah, that was the news event. So since it was lower, you might start to get into a dovish policy. Let's look at the daily. Yeah, that's huge. Based off of the data in GDP, Federal Reserve could become very dovish, which means that, let me explain dovish the correct way. Monetary policy, rate hikes, and rate cuts. Okay, rate cut. Central bank lowers interest rates. Why do they do it? Economy is slowing, risk of recession, needs to stimulate growth. Borrowing becomes cheaper, means that they will cut rates on like they're kind of influencing people to pull out loans to increase spending, or increase loans to build more things, to get more jobs, things like that. Spending increases, businesses invest more, see things like that. USD tends to go down, gold tends to go up. A dovish policy wants to support the economy, supports lower rates, may signal cuts. We are slowing growth. USD down, gold up, stocks up. So basically, they want to increase spending in the economy because the GDP was lower, so the consumer spending was a lot lower than expected. People aren't buying enough and things like that, so they want to stimulate more growth in the economy, which it will be from people buying more loans, cutting prices down, things like that, so that more money is pooling into the economy. Okay, we are about 12 minutes away from the new 4-hour candle. This is good. This is really good. Do I usually target 1% per trade? No. Does it look like I have a fucking $50,000 account, $100,000 account? No. You do not risk 1% when you are trading small accounts. That is just fucking absurd. Like, even Raja Banks, really big innovator of the Forex market, says it too. Why the fuck are you risking 1% on a fucking $500 account, $2,000 account? You need to be risking like 3 to 5%. 3 to 5% on small accounts. Small accounts are like $5,000 accounts, $2,000 accounts, things like that. I don't have fucking $50,000, and to even grow my account at a rate that helps pay for things would need about 3 to 5%. So I just focus on my lot sizes. I don't focus on percentages like everyone else. If I have a lot of capital, yeah, I would risk 1 to 2%. Stay safe while making a lot of money. 1% of $50,000 is $500. That's fucking amazing. But and it stimulates a lot of growth. But when you're working with $2,000 accounts, fucking $5,000 accounts, $1,000 accounts, $500 accounts, you need to be risking 3 to 5%. It's the only way. You're not gonna be making any fucking money. You're gonna open up a fucking $5,000 account, risk 1%, and make $50 a day. That's less than minimum wage. What the fuck are you doing? Like, minimum wage over here in the United States is what? $118 a day? You just save $5,000 to make less than a fucking McDonald's worker. No. Not 1% per trade. That is fucking retarded if you have a smaller account. When you have larger capital, yes, risk 1 to 2% because you want to make money. And you want to stimulate long-term growth, yes. But when you're working with smaller accounts, even Raja Bank says it, 3 to 5%. What the fuck are people doing risking 1% of $500? Making $5 a day? No. What the fuck? Could be possibly be making a lower high right over here. If we close above this area, we know that buyers are very, very strong. So you would want to take a buy if price closes above here. Okay. We're going to wait. And we're going to wait for the next candle because we can wick up over here to grab liquidity to continue down and wick down. But you don't want to take a buy unless you close above it and then create a lower high to continue up. You don't want to just go into the buy blindly. Okay, so that is the new data that we are getting from this point right here. Okay. So we have about 7 more minutes till the 4-hour candle. Now we wait. Okay. So do whatever you gotta do in the next 7 minutes. Go take a fucking smoke break. Go do whatever. But right now there is no trade at all. Waiting for the next 4-hour. And for buys to be in play, you want to see a lot of volume coming from these levels right here. You know, you want to see it want to make a new lower high and higher lows. Higher highs and higher lows. Right now, we're very bearish. Right now, the market is giving lower highs, lower lows. So right now, we are not in a downtrend. You do not want to just impulsively take a buy. It is a bad idea. But you can also take the retracement of the 4-hour candle because we do need to wake up. And it is very strong. See, look over here on the 30-minute. Ooh, this is a perfect little level. So you want to see how price reacts over here, okay? We might not even be able to take a trade until the next 30-minute candle. Who knows? Not enough data. Not enough. Let's see how we close the next 4 minutes over here. What would be a perfect setup is if we close small bullish, come up, close maybe bullish again, and then a bearish candle indicating that there are a lot of sellers at 45.70, and then the next candle after that we take it, but that would be another hour from now. You know, like I said, it's a waiting game. You don't want to just impulsively take a sell right here. You could possibly retrace a lot. This is a huge 4-hour candle, which means there's a lot of range for the 4-hour to continue. So do not want to just impulsively take a fucking buy right over here. Just waiting. Then you would look at the news that's happening. No strong news that is happening. There's a lot of bank holidays. Oops. Right now, we are right over here. Nope. We're right here. So, actually, no. Bank holiday was yesterday. Let's get out of here. Waiting for structure. That's all we're waiting on. It's good structure. Looking at the daily, this is what we have. Nice resistance, a nice support. So we can have a huge push all the way down to support. We just need the confirmations. So just wait. No fucking signal right now. No fucking signal. No point in being impatient right here. Like I said, you want to stay below here for a huge impulsive move. That means that sellers are driving the market down and buyers cannot take over. It would have more. Staying below this level would mean that there's more volatility in sells than there are in buys. Okay, so let's look at the 4-hour. Gotta wait for the wake up. Just have to. There's no clear top wick right now. None. Let's measure the wick right here. It's only about 40 pips. I wouldn't take a sell right now. How would you want the 4-hour to react? How I would want the 4-hour to react is I want to see a nice wick up. A nice wick up to reject down. That means the rejection, how Forex markets work is buy and sell orders. And so what you would want is you'd want to see price come up, grab those orders to continue down. Basically, in simple terms, grabbing liquidity to continue down, to have a higher push down, gives you better probabilities. It's the same trade that I took yesterday. Price create a support, we wick down to continue up. Same trade, different fucking day. Look at this. Create a support, price wick down to grab liquidity, then boom, shot up. Okay, pretty simple. And if we miss the move again right over here, then that's fine. I'm not taking a fucking sell with the candle wick being fucking, what is this? Fucking 2 pips. Yeah, no, I'm okay. That doesn't give me any confidence. We can easily reject this and make a higher low. No. Would make absolutely no sense. So now we wait. We wait for more data. We want data. We want to see price staying below 46.70, 45, or that 45.70. No trade right now. None whatsoever. It'd be a very stupid idea to take sells right now. Very stupid. If you want the sells to be even more confirmed, you'd want a strong bearish candle, a wick up to grab liquidity at 45.70, then continue down. Okay? So, we gotta see what the 15-minute does over here. Will we make a top wick? Let's see. Or will we make the top wick with the next candle? So right now, we are playing the waiting game. Do not take a sell. Highly don't recommend it. Yeah, no. We could possibly start to range over here. But you have to be patient. Do not want to fuck yourself over by impulsively selling. Still so much room that we can look for sales in. You know, about what, 300 pip worth of room. We just need 50 of those pips. So you want to be patient. You don't want to just take a sell right now just because you're too scared of not making any money. You'll make money. You just got to wait on it. Still waiting. I see that there's another viewer in here. If you need to know anything of an update of what's happening, just send a question. I got you. I can explain everything that's happening. Any fundamental questions, any Forex questions, any gold questions, analysis questions, just let me know. Because right now all we're doing is waiting. We have all the time in the world to just sit around and talk about certain things. Okay, 15 minutes is about to close right here. see what the next 15-minute candle does, and if we can possibly get a trade today. What you would want to see is, like I said, a test of these levels. You know, you can't continuously drop without getting more orders to drop. As basic Forex market structure, how the market was built is order flow. And if you think I'm lying, go chat GPT it. Go use your fucking AI and go see how the Forex market was built. And how the big market makers like JP Morgan, fucking Chase Bank created and handles orders. Go ahead. See if I'm lying. Because I shit you not. What you don't want is the 15-minute candle right over here to close small bearish, because then you would have to watch the next candle come back up, retest these levels, and then now you would have to wait for more confirmation to see if it's bearish or not. Because what you'd want after a huge bullish candle closure, you'd need another bearish candle closure to then continue down. See, look at that. If you took a sell right there, you would have been in fucking drawdown and hoping and praying to God that it fucking comes down, and it is very likely we would chase up, then continue down. But if we could stay below this area, then that makes a lot of things a lot more different. If we could stay below right here, makes things a lot more different. Because that means that sellers are holding that level and pushing it down. But like I said, right over here, look at that. Looks like we will be creating that 4-hour top wick soon over here. Look at that. We actually might be able to get a trade within this hour. We just need more data. Just need more data. If it hits, 3:30, 3 o'clock, and still just not something, if I still don't see something I want to hop in, I'm just gonna close the laptop for the night go to bed, wait for Sunday. It is Friday, you know. It is Friday, so you can't really expect the market to just unload with a bunch of volume on a day like Friday, the end of the week. Much, much, much less populated. Look at that. Look at that. And that is exactly why you don't fucking take a sell right there. There you go. Starting to make a 4-hour wick. Such a small wick. Doesn't give me a lot of confidence. You want to see if there is an impulsive move waiting to happen right over here. You want to see something really deep. You want to see the market trying to grab as much orders as possible to continue down. You don't want to see anything fucking small. You want to see them really trying to. So what will happen is if there is a huge sell right here, right? And you could go chat GPT this shit if you want. There's a sell right over here at 45.65. To fill, what the bank will do is hedge against it and then raise the prices to attract more sellers. And then once those sellers buy in at those prices, then we come down, okay? Okay, this is looking good. Looking really good. We just need some bearish confirmations. If this closes bullish, we need bearish confirmations to continue down. But then, if we start to range, highly unlikely. Now, if we close above this right over here on the 15-minute candle, then that's when it starts to get tricky, starts to go into a lot of bullish pressure. You'd want to then wait for a new lower high, a higher low to then fill all this clean fucking range over here. There's a lot of clean range above this area. And that would be the retracement, but it is highly likely that, price stalls right here, closes small body, another small body, and then continue down. Very high probability. So candle closes in about 7 minutes over here. What is the probability that we continue down right over here and reject 45.70? Pretty likely. Pretty fucking likely. So we just need to see it really grabbing those prices. It's about 7 minutes. Got to see. Got to see what the 30-minute is doing right over here. So what I will do is take a lower position. I will hold a lower position. This is exactly what the banks will do. They will build a lower position, right? Enter in right there. If in the next 6 minutes we can reject this price and stay below 45.70, you have a really high probability to continue down. And then you want to make your stop loss enough to have room to make some decisions. You don't want such an emotional stop loss like this. This is very emotional. So if we could stay below 46.70, you have a really high probability chance to continue down. So that. And then this will be our first level that we target right over here. So now we are in sales. If the 15-minute starts to close above here, that's where we start to have issues, okay? If we don't get a good rejection in the next 5 minutes, we will start to look to manage risk. So we could break its low, that's about 60 pips. That's where I would look to close 50% of my position. So then you want to get that set up. If I wasn't able to add another 15 to have more dynamic risk to higher my profits, then that's okay with me. I don't care. I'm not really worried about that. So we'll keep that right there. And now we wait. We're staying below 46.70 over here, which is a really good sign. Really good sign. We have about 3 minutes till the candle closes. So now we wait. Because what can happen right now is to fill, if there is a large order sitting here, to fill that order, come a little bit higher up, we add more dynamic risk. If it hits our stop loss, then fine. Because at that point, if it hits our stop loss, then, trade is invalid at that point anyways. So don't need to hold that anymore, but we'll look to get into a second position to continue down. But what we want is for this 30-minute candle to stay below 46.70 so that we know that there is a lot of selling pressure right there. Does that make sense? Or is there any questions of what I'm looking at? Because if we close above this area, price can start retracing up. So then you would want to look to manage risk. And with it staying up right over here, that's a very high chance. So then this is the area where sells start to get a little tricky, because now there's confirmations that price is likely to start to retrace up to continue back down. But oh, look at that. A lot of selling pressure. But we have enough room to make valid decisions whether we want to manage risk or not. So we'll just keep that on the back burner. Another wick up to that level. Yep. Huge pressure at 46.70. Could possibly get another position in, but let's just wait for some closures to possibly get into another position. But if prices drives down before you can get into another position, there's really nothing you could do. If I want to get into another position right here, what I want to see is this price really start to drive up to get more orders. And then I can hop into a second position. But we are staying below 46.70, which is a very good sign. Closed below it, which is very, very nice. Where is your TP? My TP is at, oh, you know what? Because since we have 400 pips of room, so this is like the ultimate TP right over here, but I have another TP set right over here. Why did I set it right here? Oh, I have another TP set right here, because since there's a lot of rejections right here, what is the chance that this is an important key level that price may reject again, right? So this is the ultimate TP, and then this is a TP where price has a high chance of rejecting again. So you want to stay away from that area. I mean, not stay away from that area. You'd want to start to either close half or close full. But yeah. First TP is at 45.59. 30-minute is driving up. This is where you can possibly take a second position. We'll see. Okay, what I'll do is I'll get into a second position right here, keep my stop loss the same, and now we have room to create decisions on whether we are going to manage risk on these trades and close out or not. So if it closes above 46.70 in this 30-minute candle, we will start to look to manage risk. But as long as we stay below it, keep on rejecting this level, we should be okay. So basically, we are playing off of the 4 hour and the 1 hour. Okay. May even have to hold it to the next 1 hour, because what this is doing is, say we create a resistance on the 1 hour. The next candle on the 1 hour can wick up, continue to fill this wick, but we took the trade based off of the 4 hour and 30-minute confirmations. Okay. About 30 minutes till this candle closes, so I have a lot of time to create well thought out decisions on managing risk. So now we wait. I'm not getting emotional on the drawdown. We still have a set amount that we wanted to risk. That's a set amount. That's already like giving our money away. So right here, what I'll do is I will start to look at these candles, start to look for closures, and see where I want to manage risk. Right now, the 30-minute hasn't closed, so I'm not going to touch this trade. If it hits my stop loss, it hits my stop loss, but I can't manage risk properly unless we get closures. You need confirmations of why you're making the decisions that you're making. You can't just close it because it's what, 20 pips in drawdown. That's not bad for the amount of volume that we have in the market today. It's not bad at all. You manage risk already. We had a set plan. If you manage risk, too early, then, you know, that's on you. That means that you're probably over risking. You know, that was probably not a good idea before waiting for any closures before closing your positions. But we'll see how the trade plays out. If it starts to go up, then it starts to go up. We'll start making decisions at that point. But, you know, with you closing during an open candle, that is just not something that I would do personally. But let's see where this trade takes us. Because the 30 minutes still open. Still open. And you don't want to manage risk too early when it's still open. Now, unless this candle fucking shoots up 50 pips in 2 seconds, then okay. Close while the candle is still open. That's fine. But if you look at it in a broader scale, say I look at how it looks when I zoom out. That small push that it did isn't too scary. Especially to me right now. It is not something that would have feared me into closing. But how you manage your money is how you manage your money, and that is totally okay. So now we are just waiting for any confirmations that it may continue to retrace back up. But for now, I'm not seeing any. Fifteen minutes gonna close soon. About 2 minutes, but still waiting on a 30-minute closure. Beautiful. Very nice. Now, if we could stay bearish, that would be awesome. Because then that's when you start to target the huge moves. You know what I mean? That's when you're able to target really big moves. If we could stay bearish for this 30-minute candle. Okay. While we wait for the 30-minute closure, I'm going to go do something really quick. Be right back. I'll take my phone with me, so if you guys have any questions, send them in, and I'll come back to the computer, but I'm going to wait for this 30-minute closure. Let's see where we're at. All right, if at any point in time we get to right here, I'll close one of my positions and then put stops at break even at the other one. Okay, I will close this position right here. Stops to break even. Let's close out half right over here. And then wait for TP. Let the runner run, and that is it, and that is all. Okay. Yeah. TP is at 45.59. Just gonna let the rest run at this point. Might just turn on my laptop. Turn off my laptop. Last chance. Does anyone need me to break down the trade and why I took it? If no one has any questions, I possibly might just go to sleep. I have a tease testing tomorrow to get into a college. Got to preserve some brain power for tomorrow. It's about a 4-hour test. So if no one has any questions, then I think I will just let the rest run to TP. If we break its low again, I'll move my stops to the top of this wick and then let the rest run. Just so I could preserve some capital that it made. I should host like simulations because I take these trades on the simulator all the time, and it's exactly shows my exact strategy. Shows my exact strategy and why I took this trade basically. So maybe I should start hosting some simulations. We'll see. If we start to get more viewers every day, then maybe. But to attract more viewers, if anyone could please take a screenshot, tag my Instagram, it's fxalldayllc. It would really help the growth of this channel and help me provide more free education. Okay. Well, I think I'm hopping off for the rest of the night. Everyone have a good weekend. See everyone on Monday.